Afternoon, everyone. This is Teacher Dean, and today we went over the 3 ways to learn. You can learn debits and credit different ways. Again, debit and credit. This one look more like an art person. Have the little arrows drawing. Then debits are on the left, credits are on the right. This should be dead clear. So different ways. People say DC, aid, lure. I see dead, as in DEAD, going down, CLER, dead clear. Whichever way you choose to learn this, debit and credit is fine. Also, we have dealer, which is a common way of learning debits and credits. Also, the other way you do, you just learn assets increase your debit, assets decrease your credit, liabilities increase your credit, liabilities decrease your debit, equity increase you credit, and equity decrease you credit. So these are 3 ways to learn, and I hope it is dead clear. So let's go on to the double entry system. And I call this DES. Hey, DES. This is a double entry system. So in order to explain the double entry system, for me, it is easier if I give you a scenario. So on July 1, Allen Mechanic fixed Mr. Hendricks' Toyota Matrix, and the charge was for $2,500. So who is Mr. Hendricks? He's a customer. He's paying cash, and cash is what? An asset. So when you get money and you put it in your bank, in your business account, it's a debit. When you get paid and it is income, in your books is also reported as a credit. Everybody got that? So again, in the double entry system, you record everything twice. Now, let's move on. Here, we are looking at journalizing each transaction that has happened for Allen Mechanic. So Allen fixed cars, he charged, he put in the cash, he put it in his income. Then he fixed another car, he put it in the cash, 500, and he put Allen income for 500. Then Allen has to order parts on Amazon. So we put the expense for Amazon and we take the money out of cash. So these are what we call a journal entry. We are going to use this journal entry to move it from the journal entry into what we call the T account. And we're moving into the ledger account rather. So what is a ledger? A ledger is a group of T accounts, or it consists of grouped T accounts. So let's take a look at that. What is involved in our T accounts? Drawings again, expenses, assets, liability, our equity or capital, and our revenue. This is the same dealer, but now we're going to move it from our journal entries and put it into our ledger. So what is a ledger? A group of entries, all of them. This is a whole group of entries right here. And they consist of T accounts. All right. Now, why do we need a ledger? We need a ledger to one, record, and to summarize. What are we recording? What are we summarizing? All the financial transactions of an organization, business, or entity is recorded in what we call the ledger. The ledger in itself serves as a place that helps in tracking, managing financial activities, and it ensures accuracy, transparency, and accountability. So that is what this ledger do, why we need the ledger. Now, the question comes in, why do we need to even post the ledger? Posting to the ledger is a process of transferring the information from the journal to the respective accounts in the general ledger. So we're taking the debits, we're taking the credits that are recorded in the journal, and now we're going to just organize them into different categories. So I see it like a place in your house, your food closet, or where you put your food, your pantry, whatever you all call it. You put all these cans, everybody have this whole bunch of cans inside of their cupboards or their cabinets. You have condensed milk, you have evaporated milk, you have peas, you have corn, you have coconut milk, you have various things inside of the cabinet. And one day you say, you know what, I am going to organize this cabinet. So I'm going to put the milks that I have, organize the milk, put them under their right accounts, put them in their right places, put everything I have and organize it so that they have their own little area. So when you organize the area, each one has their own bucket. Okay? So this involves taking debits and credits and entering them into the appropriate T accounts in the ledger. So every transaction that you have in your books, they affect a specific account. And then after we post them to the ledger, then we are going to look at the balances and totals for each account. Now, what are the types of ledger? We have what they call the general ledger and the subsidiary ledger. This general ledger is the one that records the information for the balance sheet and the income statements. And we will go over the general ledger portion today. So that is the general ledger. So what does the general ledger have? The same thing we've been talking about from first year class. It has the assets, it has the liabilities, and it also has the equity. And what does the general ledger for the income statement has? It has the revenues and it has the expenses. So let's look at what we have. This is a journal entry for Allen Mechanic Shop. Remember, he did a job, got paid $2,500 cash. Then he has to record his cash, record his income. Again, he did another job. He got paid $500. He has to record his cash and record his income. Now, he had to order parts on Amazon, so he had to record his expenses and record his cash. Now, here at the bottom, where you see cash, Allen, and Amazon, with the debits and credits, this is where we're organizing or categorizing into the ledger. So we look at the first one, we take the $2,500, which is a debit, and put it into its own account, which is cash, as a debit. We take the 2,500 as under Allen income and put credit for Allen income. Then we look at the next transaction where we made some more money. We put the $500 as cash in the cash account. Then we take the $500 and put it under Allen's income. Now, the last transaction, now we have to open a T account for Amazon. Amazon is an expense. We're going to debit the expense for $350 and credit the cash for $350. So I hope this kind of explains what we are doing in terms of having a transaction move from the journal entry into the ledger. So what I want you to do is to practice the questions inside of the textbook. You can also find some practice questions online so you understand clearly how to transfer from a journal to a ledger. Thank you and have a superb day.